Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. Today, you get to see that in practice and see in what and how I invest my full $2,427 weekly paycheck and how I pay bills on margin. I don't pay my bills first, then invest the rest like most people do. By using margin to pay all my bills, that enables me to invest 100% of my income and never interrupt the money compounding in my brokerage account. Step by step, you'll see how I invest to build monthly cash flow that'll eventually replace my full salary. That said, as always, you'll get radical transparency on my channel. If you want to see my real numbers, follow along my portfolio by checking the free Snowball portfolio link in the description below. And if you appreciate all that transparency, make sure to give a like and subscribe. As usual, just a quick disclaimer. This video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. As far as the weekly flow chart, I'm not going to go over it. If you want a deep dive of this, check out the video at the top right. But if you want to pause and take a quick look, this is basically what we'll be doing today, and we'll be just stepping through this whole process live in the video. So let's just get right to it. Today, I wasn't gonna invest in it originally today just because it was kind of green today, and I was like, oh, maybe tomorrow will be a pullback, but midway through the day, seems like it's kind of gone down a bit, so there's a little bit of a dip to buy. So we'll just kind of go ahead and do that. First things first, I'll transfer over the money from my paycheck. Unfortunately, again, I can't show this anymore on screen now that I'm on Robinhood Banking until they actually get this on desktop. So I'll transfer my full $2,427.87 paycheck here. So let me just set this up here and sending it over now. Should see this update in a second here. So you'll see the net value go up by the full paycheck amount, correct? So you see that there. See the buying power will go up by double the paycheck amount. My margin total goes up by exactly that paycheck amount. Margin used goes down by that paycheck amount, essentially. And then my cash available for withdrawal here goes up by the exact paycheck amount. So for buying power, they basically give you like 1-to-1. So if you put in a certain amount, they'll give you that same amount in margin that you could use technically. So let's just get that fully invested. So first things first, we're going to do 10% into growth. Let's just get that invested first. So 24227.87. So 10% into growth. So $242. Let's get that invested first. And what I'll get that invested in today, because if we check the find a dip tool, growth has been doing pretty good over the last week, really. And we're not seeing much of it in the simple moving averages here. So it's mostly on the high yield ETFs that are on dips here to buy. So if we check on the sheet here, everything's mostly in the green. DRAM's still in the red here. I don't quite want to buy it yet, more of it. And then today too, we are at the beginning of the month. So normally what I do is do like a $200 buy into my hedges, right? I'll get into this in the weekly portfolio update this weekend, but I actually moved KGLD out of my hedges. So now it's only down to IALT and CLSC. KGLD is now in my anchors. And so I'm thinking I'll just put the $242 through to one of these or two of these. So I'm thinking when I look at stuff, so CLSC is up quite a bit. IALT is just about neutral and a little less than CLSC. You'll notice here that I sold out of OR and that went split between IALT and C here. So I'm thinking I'll just put the $242 towards T here. So it's in the hedge category, but I kind of consider like these part of growth overall in a way. So let's just do that. So $242 in IALT, and we check where we are as far as the buy. So it's gone up a bit, definitely close to all-time highs for IALT, but that's okay. Dollar cost averaging is part of that, right? It's buying whether it's high or low, and then it'll average out in the end. So $242 there. Let's buy that. Great. And then now for 90% into high yield. So I think as usual, I'm going to split it into two. So if we take that amount, divide that by 2, we have 1092.94 here. So let's do that. So if we go back to the find a dip tool here, kind of see what's really low. I've been holding off on it for the last couple of weeks, but BLOX here is consistently in the lower end here of things. So if we look there on the 10-day, it's actually MLPI right now. BLOX on the 50-day, BLOX definitely down the most with the downward pressure from crypto and chips, right? It's because BLOX has a little bit of chip exposure through NVIDIA. I think TSMC is in there as well. BLOX, and 200-day Alti, BLOX, YMAX. So I'm thinking half of that amount will go towards BLOX. So let's just do that. I think overall, I've been focusing more on blocks over BTCI just because I think like once there is a crypto bounce back, like blocks will have much more of that uncapped upside compared to BTCI, given that it's using put credit spreads versus BTCI's covered calls. So let's do that. So 1092, let's call it 94 essentially, 1092.94. Do blocks. So for blocks here, we're basically going to be buying at a good low here in this kind of channel. So I've been kind of buying as it's gone down, right? So blocks 1092.94, great. I'll buy it, awesome. And then so for the other half, so we're going to do another 1092.94. So let's see what else is on a dip here. So MLPI, that definitely catches my eye just because there's the potential of the war resolving. I'm not holding my breath on that. I think they'll announce it and then something will happen again and then it'll fall apart. And that's kind of been the cycle we've been going through for the last few months. So right now, because they think the war is going to resolve, oil prices are coming down, so MLPI is going down. But I don't think that's necessarily going to last, and probably something will happen again. The whole situation is just so volatile. So happy to buy that dip. So can do MLPI, and then maybe I can do another one here. So we see KGLD is a little bit lower here. It's up today. Then when I look at the high yielders here, so like a lot of them have recovered. So BCAT has recovered, TDAC, TSPY has recovered, OVL, MLPI, and KGLD here as far as the monthlies, right? So like last week I split it between 6, like pretty much these 6. So these 4 in the green. Maybe I'll just buy these 2 that are in the red here. So MLPI, half in MLPI and half in KGLD here. So let's just do that. So MLPI and then KGLD, just changing it up from last week where I kind of just invested across the board, across all of them. So if we divide this by 2, 546, 48, 47, sorry, 546, 47, 47, great. So buying MLPI's dip today. And then buying the dip in gold as well today. Gold's not quite dipped, but it's been dipping like since the beginning of the year. So buying in this dip channel over here. Maybe the tides are turning now. Seems like there's a little bit of a lift here, but we'll see. 546.47. Great. Awesome. So that's all bought. And then you'll see that the net asset value hasn't really changed just because all the money stayed in the portfolio. The buying power has gone down by exactly the amount that I put in from my paycheck. So now the buying power from before I started is actually a little bit higher because like half that amount's still available, but I'm not using it all up. And then half the amount of the paycheck stays in cash as collateral. And then margin total stays the same because nothing has come out. And then margin used ticks back up to what I was before the paycheck came in. So now next step is to pay my bills. So if we go over to my bill spreadsheet here, so we have 2 bills due today. So we have my Fidelity Visa cashback card and my internet. So just a little Fidelity bill this month. Next month's going to be actually quite a bit bigger, like in the thousands, because I have payments for our wedding reception that's coming up with friends and all that, those related costs. So I'm putting all that on credit card to get cash back there. And then internet, you'll see that there's a big jump here. So 124.97 to 164.49. So my promotional period with Xfinity expired. I tried calling in to see if I could get a discount or just some new promotion, and they were able to get me down to 146.43 for the exact same service, which isn't great. So I wasn't happy for it. And honestly, I'm actually switching today. I'm just getting Ziply installed for those that are in Washington and that recognize that. And that's going to cut my internet bill from this to basically $70 for 2 gig fiber. So double my current speed. And then also I'll be getting Ring for home security. So that's going to be $20 extra a month. So $90 versus $146 all in for Xfinity. So pretty good deal, I'd say. And seems like from what I've been researching, Ziply and stuff is a lot better. And then Ring, I feel like I'll just like it better as far as the home security from what I've seen. So happy about that. So this will kind of just change up after this month. We'll be calling in Xfinity and canceling, but I still have to pay the bills until then. So 128.54. And then let's get that transferred over. So I have to do this on my phone again. Sorry about that, but let's just get that transferred over and then we'll see these numbers update live. So relatively small bills this week. So let's see. So 128.54 for Fidelity. I'm going to send that to my Robinhood savings account. Okay, so you should see this update here. There you go. And then I will transfer 164.49 for my internet bill. Great. So you see that transferred over. So relatively small bills. So you see the net value went down, right? So that comes up quite a bit in the comments where like people think their net value won't go down when you pull out a margin, but it does. What doesn't go down is your gross portfolio value. So this number, basically all your assets combined, because you're not selling any assets and taking money out. You're taking a loan against these assets. So what never changes is the gross value. This just fluctuates based on the market and what you invest. And then margin used, that gets added to the balance when you pay bills, and then that affects the net value here. So this will change when you pull out money on margin and things like that. So very important to keep in mind, and very important that you understand margin if you're dabbling with the strategy. Make sure you know how all the numbers move and before you go any heavier, because you don't want to go into this blindly and not understanding that. So now that that's all invested, so pretty small week as far as bills. So just $293 here. So that's nice. So that means that like, if you take full paycheck and minus out the $293, so that's $2,134 net that gets added to the portfolio in that sense. Just adds to the net value essentially. So one thing we'll want to do as well too, just to see how much money we've added to the yearly and monthly income, we'll just take a quick snapshot of the income currently, the monthly income, and let's just get the spreadsheet updated. So, and then if you're interested in this spreadsheet, definitely give it a check in the description below on Gumroad. You can buy it for $5, one-time fee on Gumroad. Personally, I kind of like using both this and Snowball because I do like the manual portion of it and just having a little bit more control over what gets displayed and stuff that I like keeping track of. So I like using both automated and manual, but I'm a weirdo like that. So let's just get these numbers updated. So MLPI, this should be a nice little average down. So you wouldn't be able to see this average down if you were using just Snowball. Right? So MLPI, just a little average down there, which is nice. Update the shares. KGLD, this will be probably a very small average down, just like 1 cent. So nothing crazy, but still, I'll take it. KGLD, update that. And then BLOX. This will be a nice average down for sure. Yeah, it's going down quite a bit. So 1611, which is nice. And the shares. And then IALT. This should be just pretty much about flat, I'd think. Just about flat. So just need to update the shares here. And great. So that's fully updated. So if we add everything up, we're actually hitting an all-time high in the portfolio after the run up this week. So the gross value sitting at 433.6K using 202.4K of margin, and the net value sitting at 231.1K. Actually, one thing I need to double check, because this morning I actually posted my trade alert and I think I forgot to update. Oh wait, no, I did update blocks here because I bought some blocks with my RH Gold cashback. So that got caught with the blocks update there. Great. But yeah, this is a little bonus from the Discord. If you're interested in checking it out, you can join it by paying $3 a month for either the YouTube membership or the Patreon membership. I have all my trade alerts here. Great community of like-minded investors that are living in their brokerage with tons of different means, with options, with growth and high yield income. Some are just doing growth purely. So lots of different ways you can, and lots of different people you can learn from. A lot of people share their portfolio. So you can, lots of different strategies you can kind of pick people's brains on and learn from. And that's what I really like. It's very open to that and love our little community. We're sitting at like 450 members roughly. So you can find that in the description below if you're interested. So that's where the numbers are sitting at. If we check on how it's split up between growth and high yield income, I'm sitting at 192.4K in growth, so roughly 44%. And on the high yield income side, sitting at 241.3K, so 55%. So that's what makes up the 433.8K. If we look at the margin held, so my equity sitting at 53.32% here. My margin maintenance dollar value sitting at 108.4K. So that leaves me 53.12% away if you go off the net portfolio value from a margin call, so 122.8K. If we go off the full portfolio value, the gross portfolio value, I'm sitting away at like 28.32K. So decent buffer. It's growing again after the dips that we've had recently. My buying power is sitting at 80.7K. So that you take your margin total minus your margin used. And if you take half that amount, the 40.3K, that's my cash available for withdrawal. So technically this is money I could use to fully invest in the portfolio and use my full margin total. But again, I don't want to do that. I want to keep my margin buffer high and stay very clear from a margin call rate. But in case of emergency too, like I could pull out 40K in cash if I needed to, right? And the portfolio would still be relatively okay. It would be tight for the margin buffer for sure, but it's a possibility. As far as the monthly dividends, so let's actually calculate it now. So if we take this new after number and minus out our old one, we created $51.31 of monthly income with our investments today. So if we times 12 that, that's $615.72 in yearly income. And then if we do times 52 to like, assuming we invested the same amount every week, but it'll differ, right? That's adding an extra 32K of annual income potentially if I were to do that. So you can kind of really see the power of investing into the high yield income and how that's really replacing my salary over time, right? So with that, I'm sitting at $5,488 a month, an income that my portfolio is making, 65.8K a year. That's extra, right? So that's on top of my current salary of 175K that I'm making. So that actually pushes my salary with dividends up to 240.8K, which is amazing. And weekly, that's 1.2K, and daily, it's $180. So that's roughly a 27% distribution yield. So this is if you go off just what's invested in the high yield income assets. If you go off the full taxable portfolio value, it's sitting closer to like 15%, which feels a bit more sensible. But that's why I'm split between kind of growth and high yield income, just to kind of set growth up and to counter the NAV erosion. And then like, again, this is not free. Like, so I have a pretty big margin balance, 202.4K. I'm paying a 4.5% interest rate on that. So that's $755 a month that I'm paying for that leverage. But because I am using margin to pay all my bills, that's enabling me to invest all my income, build my monthly cash flow, build my growth. And I'm making $5,488 every month. So that's a pretty positive margin spread, right? Considering the interest. So that's $4,733 that I'm making net after that. So roughly a 22% yield. So pretty awesome when you consider all that, right? So definitely some risk to it. There's always, nothing comes for free, right? There's always a trade-off. But how closely I monitor things, I feel good about running this strategy personally for my stuff. So that's where all the numbers are sitting. And that's the video here. The last thing I do here is just color code these to show that they're paid. Great. Wrong color. Is it this one? That's the one. So that's another week of build pays, another week living out of the portfolio. So we really saw this whole process played out live. So week in, week out, that's what I'm doing to kind of replace my full salary. And hopefully that'll help me retire early by 40 years old from the games industry. So hopefully you appreciate kind of seeing this all live, transparently. And if you appreciate all this transparency, make sure to give a like and subscribe. And if you want to support the channel, definitely check out the description below for my free and paid links here. And if you want to catch up on last week's weekly portfolio update before this Sunday's new one, definitely check out that one on the bottom left. And I'll catch you in the next one. Peace.